Um, Hello, everyone. Great to have you here with us. Hello, Rachel.
Hi.
Uh, cool. Yeah, today's topic of the webinar, Closing the Gap with AI, Controller's Role in Real-Time Finance. And I'll just add the controller's role in the era of intelligent finance. And I think you'll see that that's part of the focus today. Um, Rachel, let's just start with the short introductions. So I can start. So my name is Niv. I'm the Chief Business Officer of Panax, one of the co-founders of the company. Coming from finance and business background, so I'm a CPA. Spent some time in EY in financial consulting. Moved to the private equity world, was both an investor and an executive in a portfolio company, and started Panax 3.5 years ago with two co-founders. Um, yeah, and since then, growing the business and in charge of all the go-to-market, customers journey, partnerships, all the commercial side of the business. Rachel?
Okay, mine's a little bit less impressive, but I'm Rachel from Melbourne, Australia. I started my career at PwC as a CA, and then moved on to another fintech called Airwallex, and I've been here at Panax over 2 years now, working across product and customer, and kind of helping navigate the direction of the product.
Awesome. And you're too humble, but one of the first employees at Panax. I think you have, let's say, one of the deepest understandings of the bits and bytes of the system, how it works, and the value we're providing the customers with. Um, all right. So we'll kick off by describing a bit the role of the controller and how it evolves or has been evolving over the last decade, let's say. So I think that we're all feeling the shift of expectation of the controller to not only play a technical role but also to be a strategic partner to the CFO, to the business, to the management, and to also impact of how decisions are being taken in the organization. So we divided it into three legs or main legs that the controller is overseeing. The first one is the accounting, obviously the more technical part of keeping the books updated, aligning the numbers with the accounting standards, and also making sure that the books reflects the business. Um, the second one is more about the day-to-day operations. So depending on the size of the business, but usually what we see is that the controllers are also in charge of the collection, the payments, sometimes even on the cash management, at least until there's a treasurer stepping in. And also at that point, we still see that the controllers have an impact or an interaction with the treasury team around that. And the last one that I think that that's also the opportunity of how to leverage AI is to really play a strategic role, to be a partner for the CFO, for the leadership, and drive business decisions. We just added a quote that we saw in one of the blogs of EY that just described like the movement or the shift between the technical accounting to the strategic partnership, and that the controllers shouldn't only be a part of that, but also needs to be the driver of the transformation and to lead it. Um, Now, what are the key challenges of that, of the change? So basically, we see three main challenges. First of all, the data is scattered across many systems, many platforms, um, unstandardized, and that's part of the challenge of capturing everything in one place and create that as part as kind of a database that can be used then across many processes. The second one is the limited resources. So finance teams, by nature, are lean in resources. The professional personnel is hard to hire, um, and also we see that most of the time, also related to the first point, most of the time is spent on manual processes, collecting the data, crunching the numbers, tagging information, and until you get to the level of creating the insights, it's already too late and outdated. And the last one is insufficient capabilities or insufficient automation. Actually, we see that in many companies the tech stack is quite outdated, and even with the new stack, it's challenging to get real automation in place. It's hard to make sure that the data is aligned and that the day to day can be built on top of that. And with relation to the AI, and we'll touch more in depth on the types of AI and the practical uses of it, most of the system don't use real finance context. And without the context, it's really hard um, to, to gain the value of the insights of driving decisions, and even on standardizing the data. And we just added a survey that we saw made by Cherry Bakir, which is a business consultancy firm. And they asked CFOs from mid-market companies about the challenges, and 55% mentioned that data accuracy and consistency is a major challenge. Now let's talk about the era of AI and how it changes the game. So first of all, let's define AI, and I guess that most of you it won't be very new for you, but still just to align. So AI refers to systems that can learn, reason, and drive smarter decisions. In a sense, and it's using data and algorithms, in a sense replacing the human factor in the process. Um, Now, getting back to the finance day to day, and then we'll apply the AI on it. What we see today is that finance teams and the day to day of the operations is managed mainly with two, with two data sources. One is the banks, and that's where the cash data is. The other one is the ERP, where the accounting data lives. And basically, the two data sets are not synced. And it takes a great effort of the finance teams to standardize the data, to connect the different systems, to reconcile transaction, and then only after that to gain the insights and to analyze everything. So that's part of the data challenge, but that's reality today. Two system of records, very ancient, um, not very insightful, and the connection between the two um, is hard to manage. What do we want to achieve, or what's the end goal here? So basically, first we want a complete database, and it has two aspects. First, we want to cover all the data sources, so the data can be complete, and to cover the 360 of it, both if the company has many banks and platforms, and also if the company has multiple ERPs. In the end, everything needs to be integrated into one place. And second is the way the data flows and the way the infrastructure is built, because you want the data to flow on an ongoing basis to make sure that the data is up to date and that the data flows into the relevant places. If you manage AR on an AR system, you want the invoices to flow into it and the banks to flow into it. Same as for the treasury aspect. If your challenge is to manage cash and you have a treasury system in place, you need to make sure that all the banks and also the bank-like platforms are flowing, the data flows into the system on an ongoing basis to keep the data up to date. Um, the second aspect of the data is how you create standardization across the different data sets. And that's definitely a challenging one because of timing differences between accounting and cash, but also because different formats, even among the different banks, but also when you take accounting data, when you take cash data, different formats that needs to be standardized and synced here. Okay. Although the challenges, the value of getting there is huge because once you have that complete database and complete and standardized data, you can then drive many processes automatically and also in an insightful way. So, for example, if you have the complete data and the data standardized, you can reconcile automatically transactions. You can optimize the cache and create a streamlined and automatic forecasting. You can automate reporting. You can detect anomalies. So different aspects of how the data can then be leveraged, and you'll also be able to see how the AI works much better, and you can trust it, and different agents can be deployed on it to really complete the tasks and to make the major or the heavy lifting of the tasks for you. um, I want to get into the more practical discussion of how AI is used in finance teams and in cash operations specifically. So first of all, AI is not a new practice. AI has been used for many years, but it has mainly been used in the form of machine learning, which means that smart algorithms can learn out of past data and past and historical trends and predict the future based on that. And the practical example for that would be anomaly detection. If the model detects any anomaly, it can raise the flag. Additionally, you can think about examples like prediction based on historical patterns or automatic taggings of transactions based on past tagging. So that's where most of the practical examples were until today. And the main change and the main innovation that was introduced in the last few years are obviously the language models that we all hear and even use on a daily basis. And those models are not only calculating, but also and more so understand the context and generate content based on that. And the change there in the practical use can go to places like I can give a prompt to the model and see the scenario of the like different scenarios to the planning or to the base forecast I built. In addition, or additional example is when you look at reconciliation, then it can not only learn from the past now, but also use context of different data source to really automate the process and even suggest to the user the matches. Another practical example would be to tag transactions. We talked about it in the ML side, but also on the LLM side, when the model can learn out of the context of the different data sources, the bank description, the journal entries, and different notes in the ERP, as well as external sources, then it can offer different rules to different transaction for different transactions, and make the life much easier for the user. So let's get into how Panax uses AI practically today. But before handing it over to Rachel to walk us through the platform, um, I wanna give a few words about Panax. So first of all, who we are. So Panax is an AI native cash operations platform that was built for lean finance teams with complex treasury needs. Can be different banks, different platforms, different currencies, different entities, but the common denominator is complexity. And the company was founded by finance professionals. We both Rachel and I we talked about the about our background, but also the CEO of the company was a VP of finance of a wide scale e-commerce in the past. The CS is led by accountants, so we really speak the language and understand the customer's need here. Um, and today we touch four main aspects or legs. The first one is treasury. We streamline all the banking data into one place and giving the full control and visibility over the different pockets. We optimize the cash. There is a forecasting module to project the future. Second one is accounting. We basically sync between the two data sets that I mentioned before with reconciliation, posting journal entries and really saving there tons of manual hours. Finance operations. So we have the accounts receivable module that gives insights also with AI about actual collection behaviors based on the customer actual trends. And also we have an aging flow to manage the day to day around the collection. And the last one is the payment operations. So the customers can execute through Panax. So it's like cross-border payments with FX. We offer some investments options through the platform. Um, yeah, and that's in a nutshell about Panax. So how we use AI, and you're gonna see some examples, as I mentioned on Rachel's demo. So first of all, we built Panax with the approach of AI first and AI native with the structure of the data. So really a lot can be built on top of it, and you'll see some examples. But we just wanted to outline here the list of agents that are in the system, that are in development, that are on the roadmap. But basically, that's the direction that Panax has with the agentic AI trend and reality. So first of all, on the connectivity and visibility side and cash flow side, so we have different agents that monitor the data, that create insights like cash in transit, but that's an automation of a certain flow by the model and by the AI. As well as on the cash flow side, we just analyze and give like an executive summary on top of the data with that agent. On the forecasting side, so different trends that are used in the forecast, both on actual collection trends and trends of historical data. But also what we're building now and introducing to the market is the liquidity optimization and agent. Like when you have different pockets and you need to control and optimize the cash across all of them, and you want to make sure you're capital efficient and you keep the buffers as squeezed as possible, but still keep or still serve the operational needs. There's an agent that will recommend you and change on the go based on the actuals, what is the optimal capital allocation across the different pockets. On the operations and control side, so reconciliation agent, and also accounts receivable that again shows you remind you of different overdues, creating the emails, sending it, showing you the insights of potential late collection. And the AP agent is something we're gonna introduce next year. And on the risk management side, there's also a lot to do based on the different exposures to banks, based on the currency trends and currency exposures. So we're creating different agents there to make sure that you proactively, or the customer proactively, um, keeps the risk mitigated. I'll move now to Rachel to walk through the system and show the practical examples of Panax. So Rachel, the stage is yours.
Thanks, Niv, and you're welcome to join in whenever. I'll share the stage.
I will.
Okay, great. So I'm assuming you can see my screen now. All right, so I mean, the first thing you'll jump into as you land on Panax is kind of the cashboard. And this kind of just gives you an overview of what's going on, the current status, balances by various breakdowns, inflows, outflows, and a bunch of other things. But for the purposes of today, and the intro that Niv gave, we'll try focus on like the connection between the banks and the ERP data sources, and why it's really crucial to keep these two connected and up to date, and also how Panax helps facilitate this process. If I jump quickly to the cash position, you'll see the aggregation of all your balances from your different bank accounts. You can see also the split by various types. And I guess just to like take this back for a moment, if you're thinking about a company, a global company with, I don't know, over 50 to 100 bank accounts, to be logging in every day and trying to understand this cash position is really difficult. So I guess like that first layer of the data is centralizing it, the accuracy, and that's kind of pulling it all together and making sure you have like a starting accurate base point to make those decisions, especially from a cash perspective. And then from the other side of things, the ERP, Panax connects to various ERPs, even those that have been known to be more difficult to connect to. The integration has been built there. And so the first way that Panax can kind of help in this reconciliation between the bank and the ERP is via the bank data feed. So instead of kind of typically logging into your banks, downloading bank statements and uploading them to your ERP where a direct feed isn't available, Panax can automatically sync that data straight to your ERP to prepare you for the reconciliation process and make that starting point much simpler and ready to go. So you can see here briefly the number of transactions synced per day, the amount of banks covered, and also the accounts synced. Once everything's reconciled in the ERP, the next kind of piece of the puzzle is kind of categorizing cash transactions for the purpose of reporting and also forecasting. And so the other way that Panax syncs with the ERP is by we have an AI algorithm that runs and identifies matches between objects in the ERP, whether that be like a bill payment, an invoice payment, a journal entry, and transactions in the bank. So just for an example here, you can see an incoming transaction of 15,907. And here you can see the object with which we've matched from the ERP. So you can see the GL path, the customer or supplier associated with the transaction, and also the actual object with the information from the ERP. In this case, it's an invoice payment. You can also see how the tag was given to this transaction. So in this case, by the customer. And if I click here, the settings, I can trace the mapping between the customer in the ERP and the cash category in Panax. So that's in terms of categorization from the ERP. Another way that Panax categorizes transactions is via rules. And so we also have an AI model that runs here, as Niv referred to, that identifies common patterns in transactions, whether that be on the description. You can also add conditions for the amount, the date that it occurs, or the transaction type. And here, once you're happy with this, you can review the results. Panax will also, in many cases, suggest to you the most relevant category. It can obviously be edited by you, but the AI model runs to determine what this description relates to and how it should be categorized from a cash perspective. Purposes of
Maybe
categorization. Sorry, Niv,
maybe
did you want to say?
maybe you're gonna touch it a little, but maybe you can show the like the AI created rules on the smart categories, smart categorization banner.
Yeah, sure. So as I referred to, and maybe this is a better visual here, these are Panax AI-based suggested rules. The model runs, determines recurring descriptions and patterns, and provides you with suggestions for rules that can be created instead of you creating them yourselves. So all of this categorization is for the purpose of cash reporting and cash forecasting. So I won't go through the reports in too much detail, but an example of the cash report here is the cash bridge. So here you can see for any given period, here we have last month, but you can customize the date range here. You see your starting balance, like where you began the period, the closing balance where you ended, and obviously any movement in between split by these categories that can be customized by you. Panax can also help you speed up the reconciliation process, particularly around closing the AR. So Panax's AI model runs and identifies incoming transactions in the bank, tagged as collections or general inflows, and can match that against open invoices in the ERP. This is a huge time saver. It means that automatically the matches are posted to the ERP just by the click of a button. We have customers, global companies, with over 20 entities where they had their AR team spending full days, up to 8 hours reconciling incoming payments to invoices. And now with the help of Panax's cash application, they've reduced that by 75 to 80%, and it's down to 1 to 2 hours, depending on the amount of transactions per day. So the model runs using kind of a number of factors. You can see here some examples where it's pretty obvious. You can see that the name of the customer from the invoice appears in the transaction description. But there are also much more complex examples. Over here, we can see no invoice number or no customer name, yet the match is still found. We can also find matches on multiple invoices with one incoming payment and display the breakdown and close them all against the same transaction. We can also close payments where there's a fee difference, as well as a discount. So multiple situations are addressed here. Once everything's matched and you're happy with it, it can be synced to the ERP just with the click of a button here. If you're not happy with the direct sync and you're kind of more data conscious and a bit more concerned, even though there's nothing to be concerned about, you can export and upload direct to your ERP as well to close and post all relevant journal entries and payments.
Yeah, and Rachel, just to add on the export option, like in the end, it's also helpful if you have any exotic ERP that is not necessarily connectable easily. We can modify the export file format that then you can use then only to upload it. We can also auto export it and send it to the ERP in different ways, and that's flexible to your needs.
Yeah, it's a good point as well. And so I guess kind of all the things we've covered mean that you can basically close the books faster, you get a better understanding of the current position, and it helps you kind of forecast future collections more accurately and also quicker. So I'll jump quickly here to our accounts receivable tab. So here you can see a collection report, and this is really where we dive into the details, plus give you an overview of how your customers typically pay against payment terms. So you can see here a graph that shows you the average days to collect for your customers against the average payment terms, and how you're tracking from that perspective. It can also be cut by individual customers or by an entity as a whole. And this is really where the system starts to learn like typical behavior patterns of those customers. That really gives you that granular insight into the forecast to understand exactly when you plan to receive to receive collections from those customers, and not simply based on a number that's given in the invoice due terms, which may not be accurate. We also have an aging report here where you can see overdue invoices, and everything that's owed to you, basically your current AR. This can also be cut by customer or entity, and really gives you that deep dive into where things are today.
Rachel, get back to the collection report for a second. I just wanted to add that we see different use cases where different companies use different calculation methods for DSO. And here it's really to build the DSO bottom up. And it's much more insightful to base the DSO on actual behavior of customers than to go from the balance sheet calculation with the sales to the period and get to a very high level number. Here it's much more detailed and take all factors in. And then the consequence of that is that you can rely on much more accurate data to the projections.
And I think a good visual for that can be seen in the forecast. So the forecast can be built with a number of inputs. So it can be weekly or monthly, consolidated or by entity. We'll just take an example here. But when we go to forecast collection categories, we really have that insight from the ERP of what's open, what's expected when, and that really helps to make the forecast for collections more accurate. So here we can enable the ERP data. And let's say we know that invoices are typically raised 8 weeks in advance. We might choose to rely on the data for 8 weeks here. And this is where it starts to break down and get more interesting and kind of like what you saw in the collection report. But here you can choose to forecast based on the contractual terms, being the invoice due date. But you can also choose to forecast based on the customer collection trends or the entity collection trends. And for customers that are using these trends, like we have heard a lot of anecdotes that it really makes their collections more accurate using those expected either customer collection patterns or the entity collection patterns. So if we preview the data just using the invoice due date, we will get a series of numbers. But if we preview it using the customer collection trends, we'll start to see that the numbers start to move in accordance with expected collection patterns for specific customers. For every period on the forecast, you can also see which invoices, like on that granular level, are expected. If you have kind of more inside knowledge and you know that something will be delayed or brought forward, you can also change individual dates on the invoices to make that collection forecast more accurate. You could also jump from here into the customer collection trends and see it like you saw in the collection report. You can see individual customers and how they perform against their payment terms.
Yeah, and Rachel, just to add there on the applying the collection trend. So I talked earlier about the two types of AI kind of. So that's using more of the ML side of understanding historical patterns and trends and use that to predict. There's another layer here. Rachel, if you can just enable like the ERP that you did for a certain number of weeks. Yeah, good. And then go to the other methods after you apply that. Um, yeah, so if you, for the completeness of the data, you can then use our AI engine to show the trends of the data and to use that as some kind of a baseline that you can then also step in and adjust, override, send comments. So that's part of the capabilities.
Yeah, that's a really good point because, like, as we mentioned, if there's only accurate data from the ERP up to a certain point, then it's great to have that extrapolation for future periods.
Right.
So another way that we push these insights is via proactive kind of alerts or pop-ups via the dashboard. So there's this little pop-up that shows you've got a new insight. And this will notify you about your expected collections either being kind of lower or higher than your contractual collections. It will also point out recommended actions. So, customers that are high risk of collection delays in this fortnight. And also customers, high value customers that you can reach out to that have balances that are overdue by more than 2 weeks. All of this has like a nice little explanation that the AI has written, but it just gives you this kind of proactive way of being on top of the collections, at least for the next fortnight, and then applying that into the cash forecast as well. Okay, and finally, a new and exciting feature is kind of Panax's own ChatGPT, where you can ask basically anything you want about your data in the platform, whether that be balances, transactions, collections, expected collections. So maybe we'll ask it, I guess we can ask it one of the out-of-the-box questions. So how are we tracking on collections? Is there anything we need to pay attention to? All right, great. So here we've got a nice answer. We can see our overall performance, areas to pay attention to, some positive trends, and finally the recommendations. So that's kind of the end of the demo today. Niv, I'll hand back to you.
Thank you, Rachel, and just just to take a step back and to kind of give the high level aspect of it. In the end of the day, we wanted to show you. I talked earlier about the different data sets and the importance of syncing between them and how valuable it could be. And we wanted to show you kind of how Panax close the loop and manage the cycles of the data. So we automatically tag transaction with AI. We're able to reconcile it into the ERP. We're showing actual trends of collection, and it all flows into the forecast that can or that makes sure that you rely on the most accurate and relevant data in order to plan your resources and uses. So that was the idea around the demo. And just to wrap the discussion up with the last few slides. Can you see my screen?
Yeah.
Cool. So a few real life use cases that we have with customers and the impact of Panax on them. So an example of a very wide global distributed company, Go Global, has more than 50 banks across the globe. We streamlined everything into one place. We're saving their 50 hours a week of manual data collection and manual processing just to understand the cash position, more than 300 accounts. Diligent is a great customer of ours where they use the cash management. They also use the reconciliation and the cash application where we save their more than 75% of the manual reconciliation process. So tons of hours that are saved there. Time payment, we were able to reduce the error of the forecast or the discrepancies of the forecast to 1%. And that allows them to rely on a much more accurate data. It's a lender of equipment, so it's super important for them to understand where they stand against the warehouse that they use to lend the money and the in and outs from that facility. And last but not least is Optimove, where we saw a real capital optimization there of allocating more than $5 million that is quickly and easily translated into a pure ROI of annual yield of more than 200K a year. Um, so just a few use cases here to show. And um, last one, what makes us the best solution in the market? And of course, we're objective here. So first of all, I think you saw on the system, on the demo, how we really automate workflows and processes. So autonomous finance for real. The AI is practical, valuable, and only gets stronger and stronger. Um, the system is built by finance professional, and I think you can tell that we understand the customer's pains and needs. And again, last but not least, we have a very quick time to value. We're holding the customer's hand throughout the onboarding. We're an experts there. We then work with the customer to meet the business goals and the needs with a CPA-led customer success. Um, and yeah, that's the key points here. So thank you everyone for being with us today. Thank you, Rachel, for doing the great demo.
Thanks
Um,
for having me.
please visit our website. We're happy to show you guys demo. We have different modules that can be very interesting and useful for controllers and for accounting teams. So we're happy to show you the power of Panax and the automation that many finance teams already use and leverage. Thank you, guys.